Hey traders, welcome to a global macro and crypto market update. We're going to be first looking at BTC to the top right hand corner, Ethereum to the top left. We have the US dollar DXY to the bottom left, and then we have the S&P 500 to the bottom right there. So let's start off with BTC and then we'll move on to Ethereum, but all of these are correlated. I view BTC as a more volatile risk-on asset, I guess, compared to the S&P. The S&P is, yes, volatile, but not nearly as volatile, I guess, as BTC, definitely. And then Ethereum is just more volatile than BTC, but Ethereum and BTC are definitely very correlated. And I view the US dollar as a very negatively correlated asset compared to all three of these, which means that if Bitcoin's going up, I am going to assume that the S&P is going up, Ethereum's going up. A lot of the other alts that I am looking at are going to be going up. And on the flip side, if the US dollar was able to hold this level of support and start pushing to the upside there, I'd expect the other risk on assets like Ethereum, like BTC to break, for example, that 10K support that BTC has, and then the S&P would complete the head and shoulders that we currently see right now. So let's actually start off with an asset, just talking about what we currently see instead of just looking at the correlations. But I do view the market as a moving entity instead of just one single chart. Looking at Bitcoin, we do see a series of lower highs, which is great to see because it's contracting in the volatility, and we do see that 10K zone, which is a very strong level of resistance all throughout half of 2019 and basically 2020 until we broke out of that zone in the summer right here. And once we broke out of that zone, we had a small tight consolidation. There was a small triangle set up there that broke to the downside, pretty big move, but we were able to hold that previous resistance as a new level of support. We had our first injection of buy pressure, we had our second injection of buy pressure, and now we are seeing a nice contraction where we see a series of lower highs, very well respected in that 10K zone as a strong level of demand. So we see you could call it a descending triangle. You could also potentially draw in a descending zone right there. So then if you do get another spill to the downside, you can still have that as a potential descending wedge, like so. So then if it does recover here, you could still have that impulsive push take you to the first move, and then you'd be looking for that previous high to validate as a new level of support, and that is going to be your possible entry, if not that high right there, because on the larger time frame, this is still within the triangle. This is the previous major high. This is the previous major high. We broke into a new high. This broke the market structure, and now the market structure is holding that previous resistance. Very simply put, we are expecting a strong level of demand around 10K, and we've been seeing that strong level of demand hold. So the speculation is there is a squeeze occurring between the lower highs and the key level of support. So we're going to be looking for that first strong impulsive push and then continuing that momentum onwards. So that's going to play into Ethereum, because Ethereum is going to basically somewhat obey what BTC does. Yes, you can have Ethereum front run Bitcoin, but more often than not, if Bitcoin starts to slide to the downside, you will see Ethereum move to the downside as well. And if BTC is going sideways, that could provide Ethereum an opportunity to move to the upside if it's in a speculative type of market and environment. But on, looking at the large time frames, overall, you do see very high correlation between Bitcoin and Ethereum. So very similar, we see a very, very strong push to break the $300 zone, which is a very psychological area right here. Was a very strong level of resistance. We see, very tight ranges, and then we see a nice squeeze here, horizontal level of resistance that I couldn't really draw very straight right there, and then we see a series of higher lows, and then once you see that break, it really took a rocket from, let's say, just over $200 to $400, so it basically doubled in a very quick amount of time. and now we're seeing our first contraction, very normal in a bullish market. But what are we looking for is a potential bottom. So this $300 zone has been a support once, twice, and three times, so we can now validate it as a nice new level of support, and we see a descending level of resistance as well as a horizontal level of resistance, which is a previous level of support and resistance. So it was a zone of sensitivity back in the summer of 2020, so we're going to be looking at that zone as a potential level of resistance even if we break this series of lower highs. If we get a little break here, we're not going to be looking for any possible entries until we break that structural high right here, because we could consolidate sideways and then dip back down. Yes, we could create a new high here and break down. That does happen, but if we are looking for momentum trades where this is the previous impulsive push, this is the corrective move making a higher low. This was the previous low right there, making a significantly higher low. We're looking for some correction, which is totally fine in a normal moving market, and we're looking for that next impulsive push. So that's going to be Ethereum. Now we're going to be talking about the US dollar DXY. So this was a little bit worrying at first, just because we had very strong aggressive pushes to the downside. We see with Ethereum, we see with Bitcoin, we also see with the S&P 500, very strong pushes to the downside. This is when we had strong pushes to the upside with the US dollar. So we're going to see negative correlations between the US dollar and these other risk-on assets. And that said, we do see in the previous structure right here, looking at this one, there was an initial resistance that turned into a new level of support, which didn't really hold that well, but that market structure did change slightly. We did create a nice ascending zone right here. We had three validations, 1, 2, 3, and then we had a series of highs that did not break, creating an ascending triangle, broke to the downside, breaking market structure, validating it as a new level of resistance, and then we continued to really aggressively push to the downside, and this is when all the risk on assets were really ripping to the upside. So we can see a lot of these assets are very highly correlated. So looking at the US dollar right now, what do we see? We see a previous resistance right here that did break. We got a failure to hold because this was the previous high that we wanted to see hold. It broke, so we got a hold initially, potential double bottom, could not hold, it went lower, broke our level of support, so now it's trading back within the zone. It could come back a little bit higher, but looking at the current structures we see within the risk on assets, I think that the overall direction is going to look something like this, where you may get a slight recovery, but this zone right here, which was a previous level of support, very significant zone, is going to be acting as a new level of resistance that the price is really going to have a hard time breaking above. So I think at the end of the day, we will see some level of an ascending zone. We'll make it a slight recovery, but once we start seeing a series of lower highs, because right now this is a low, this is a higher low, we may see a higher low with a little bit of a move to the upside, but I think we're going to expect some weakness, and once we start to see that breakdown, like we can see right here, breakdown in market structure, we see a break in support, validating as a new level of resistance over and over on a small time frame. That's when you know that we should be changing our bias. So that's going to be the overall outlook for these four assets. Moving on to the metals, we have gold to the left and we have silver to the right. We also threw in the US dollar at the bottom left there, just so we can see a comparison with what happened within the metals, as well as the ratio between them and the correlation that we have. And it's pretty interesting to see, and I think it puts it into perspective that we need to look at the different assets, not just a single chart. I think it really helps out. So let's jump into gold. First things first, the actual structure looks pretty similar to a lot of the other assets, where you see a series of lower highs with a blow off top, where you see a impulsive push that breaks above the actual contraction right here. We see that with a lot of different markets. We see gold back in 2008 to I guess 11 blow off top, and then you see that slow contraction down afterwards, but it's very volatile up and very volatile down. Obviously BTC, same thing. A lot of markets, they go up massively and then they come down and then they have a contraction where you're looking at this zone as a contraction and this is the blow off top. Similar to what we have right here. This is that blow off top right here, and this is the contraction. So we do see that this zone right here, that previous low, is going to be acting as a new level of support. What we also see is a series of lower highs right here that is going to be connected to create a descending level of resistance. Very similar to silver, we do have a series of lower highs, but silver actually, to me, didn't really have a blow off top. We see that previous high right here, the lower high and the lower high, very well respected. It is at a lower point compared to gold if we're looking at just where it is in relation to the high. But overall, silver is still holding that previous key level right here, which got validated yet again right there, and then that was a previous level of resistance. So overall, key zone of sensitivity, which silver is holding, and we'd ideally like to see a slight contraction, maybe create a previous resistance from that level of support right there. And then once you see that break, you're looking for that nice validation, which is going to be holding that previous high, and then that's going to be a potential entry for a limit order. You could do a stop entry above that high. Whatever you're looking for, whatever your method is, that's going to be the way that we're looking for possible entries on silver. Now we're going to jump into the gold and silver ratio, looking at how silver really appreciates at a greater rate compared to gold when we are in a metals bull market. Now we had a massive move to the upside here when the overall market was absolutely exploding and the risk off asset, the US dollar, was plummeting. We saw a massive move to the upside for the appreciation in silver against gold, meaning silver appreciated faster compared to gold. Doesn't mean that gold was bearish, just means that it's so bullish that it outbeat gold, which is pretty crazy. And it's not even close to the all-time high that gold surpassed, which is currently retesting right now. So this is that 2011 high that was right here around 1900. We see 1800, 1900. So that's going to be that previous resistance that's going to be acting as a new level of support. And that's going to be moving into silver because they are correlated and or positively correlated. And we see that this asset is also holding a nice level of support. Contracting and volatility, we're looking for that expansion phase to create an impulsive push, and we're looking to enter on that nice impulsive push before the actual breakout. That's the goal of our trading method. So looking at gold and silver on that, we see previous level of resistance, support, support, support right here, and then look at what we see, massive wick right here with a candle closure on the weekly, very significant time frame. We do see our first little push right here from silver compared to gold, moving to the upside, and what we're looking for is a potential failure, and this is just a retest for further continuation to the downside, where silver is going to be appreciating at a greater rate than gold, which means the overall assets that we're looking to long or buy are going up. If the gold and silver ratio actually surpasses this level right here and continues to move to the upside, it means that the overall metals market is going to the downside, which we don't obviously want to be looking to. We're not looking to long at all. We'll be very patient to look to long, and be very cautious at that point, because obviously you do not want to catch a falling knife. So that is the overall market analysis for the global macro as well as the crypto market. Hopefully you enjoyed it. If you thought it was educational, entertaining, informative, please give this a thumbs up. Definitely means a lot. And if you think that we should continue making these videos, subscribe, and hopefully we will see you for the next one. And I hope you have a good rest of the week. Bye for now, and thanks for coming.